Basically, the survey that you've released saying that banking profits are going to remain erratic with no clear trend in place at this point. So bad news for the banking sector, at least for now.
Absolutely.
Yeah.
What we found during the course of last year was that retail banking was steadily growing in confidence, whilst investment banking, which is more susceptible to global shocks, were very erratic. However, in the last quarter of last year, the retail banking confidence fell significantly, which wasn't expected given the trend that we've been seeing.
It's quite interesting. So investment banking, more confidence in investment banking than what we're seeing in the retail banking space. We also saw some retrenchments coming through in the financial industry towards the end of last year. Did that have anything to do with the confidence?
It probably, because the retrenchments was as a result of the anticipated increase in the top line that didn't transpire. Looking at impairment levels, where we've seen earlier in the year that there was a slowdown in the level of impairments, there was a significant tick up in the last quarter, and also credit demand. Although we've started seeing from the middle of last year that there was an increase in credit demand, I think the rate at which that came through, given the low interest rates, was at a lower level than what was anticipated.
And Emilio, I mean, when you look at the level that we hit in the second quarter of 2010, that was the all-time low that was ever hit for the survey. So just looking at where we are now, we're slightly better, but very far away from the highs and the heydays, prior to the crisis. When will we see a reversal in that trend? What does it hinge on?
I suppose if you look at, first of all, demand for credit, what we've seen coming through the credit crisis was that because of the indebtedness or levels of the man in the street, retail banking has suffered. And historically high interest rates, although they have come down, affordability does prohibit the lending or extension of credit. And also, I think, having experienced the shocks of the credit crisis, the retail or man in the street is slightly more reluctant to take on new credit. Looking at the corporate side, given the erratic behavior of global markets, given the sovereign debt crisis, first Spain and then the Dublin.
So the peripheral Eurozone countries
exactly,
that are becoming under pressure.
That as we anticipated that there would be a tick up, that those shocks definitely reduce the confidence levels at that stage.
Definitely. I mean, it's still one of those trends that's very much entrenched going into 2011. It's quite interesting that you're talking about credit demand and credit overall in South Africa. Household debt to income ratio is still sitting at around 78%, so relatively elevated. But on the other end, you've got interest rates sitting at 30-year lows. You've got an inflationary environment that's declined quite extensively as well. Why have we not seen the benefits of this? Do you think that the National Credit Act is affecting overall sentiment and consumers wanting to go and get more credit? Is cash king going forward?
The National Credit Act definitely is playing a role in the extension of credit, but also I believe the experience and the shocks, people are trying to reduce the levels of debt and therefore are more reluctant to go out and spend. Although, as Nikki mentioned, towards the end of last year, and if you look at the Christmas and December vehicle sales and retail numbers, definitely more positive. So hopefully going into the new year, there is more positive news coming through.
Definitely. I mean, and also just looking on the retail banking side of things, we've seen the likes of Capitec doing really well, Able starting to recover quite extensively. I mean, those micro lenders seem to be under the spotlight. And then you've got government talking about Postbank coming onto the retail market. Do you think there's going to be a big shift to the lower class banking consumer?
There has definitely been significant growth in that area. I think the cost base of the smaller players are obviously lower than the big four, big five banks in South Africa. So definitely significant growth and competition in the market, which is always good for the man in the street.
Looking at banking profits going forward, I mean, we saw banking profits of around 15% at one point. Clearly, we're sitting on the flat line. Some banks still in negative territory. A lot of concern about where that's going to head going forward. We've seen cost-cutting measures and the revenue line still not coming through as much as many would hope. Overall, in 2011, do you think we'll start seeing a little bit of optimism coming to the fore, perhaps even towards the end of the year?
Yeah. I suppose you have to look at it in South African context that all our banks are still profitable. It's just the rate of growth, which, as you say, has reduced, and it is dependent on where impairment levels. And I suppose as the the interest rates remain low and affordability becomes a bigger challenge. And if you look at the growth rates that is being predicted, it definitely bodes well for the economy, which definitely will flow through to consumers, corporates, and ultimately profits of banks.
Changes in liquidity requirements on a global level, regulations coming to the fore, how is that then going to impact the industry?
Definitely, as banks have to realign their business models and also IT systems that has to incorporate new regulations coming down the line, it will have an impact on the costs, which, as we mentioned around Standard Bank that had to retrench people, will have an impact. So we would hope that that is offset by increased revenues, but also looking especially at the liquidity measures, definitely will have to reconsider in the local market how we deal with that.
Yeah. So Emilio, the worst is behind us, is that what you're saying?
We hope so.